Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. So let's get across what we saw overnight. Globally, equity markets modestly higher, while oil prices extended recent sharp losses on hopes the interim deal to end the Middle East war will allow oil to flow through the Strait of Hormuz. Now on Wall Street, the Nasdaq and S&P 500 were dragged lower by tech stocks, while the Dow marked its second straight record close. Investors rotating out of richly valued tech into economically sensitive sectors. SpaceX shares continued to rocket higher, overtaking Amazon to become the fifth most valuable US company and briefly surpassing Microsoft's value in morning trade. Its shares finishing at around $202, giving Elon Musk's company a market value of roughly $2.65 trillion after earlier hitting a record high of $225 a share. A big driver of those gains, the launch of options of SpaceX stock. Meanwhile, Nvidia, the world's most valuable maker of AI chips, surprised investors by tapping the bond market of $25 billion. Shares of chip firm Qualcomm rose and then fell after it confirmed it's in talks to acquire AI chip startup Tenstorrent for $8 to $10 billion. Fast food company Yum Brands saying it would sell its Pizza Hut chain for $2.7 billion as it contends with heightened competition and cautious consumer spending. Shares in chemical producer Olin fell as it acquires Huntsman in an all-stock deal valued at $2.4 billion. And shares of retail trading platform Robinhood fell after announcing it's cutting about 10% of its workforce. Well, the interim deal between the US and Iran is set to extend the ceasefire announced in April by another 60 days and reopen the Strait of Hormuz, which Iran has effectively blocked since the US and Israel attacked Iran in February. President Trump said the text of the deal states clearly that Tehran will not have a nuclear weapon, and the full agreement would be made public in a formal setting in a few days. Two other issues that both the US and Israel used to justify the war, ending Iran's support for regional armed proxies and curbing its missile program, do not appear to be on the agenda for negotiations. Well, the US markets will be watching the outcome of tomorrow's FOMC meeting, the first to be chaired by Kevin Warsh. Projections from the Fed policymakers are expected to show a majority see the need to keep US short-term borrowing costs on hold all year, with a minority penciling in a rate hike to curb inflation. Markets pricing in a 5% chance the Fed funds rate will be hiked by 25 basis points at tomorrow's meeting, a 45% chance of a hike by October. The US two-year Treasury yield down to 4.04%, the 10-year at 4.42%. Australian three-year government bond yields fell to 4.39%, the 10-year at 4.82%, following the RBA decision to keep rates on hold. Markets pricing in a 35% chance the cash rate will be hiked by 25 basis points at the next meeting in August, and 55% chance by November. The US dollar index down around by 1/5, the Aussie trading at 70.7 US cents. Oil prices have fallen to a 3-month low as details emerge of the interim deal to end the war and reopen the Strait of Hormuz, which includes an agreement to allow Iran to sell oil. Brent crude futures falling around 5% to $79 a barrel. Gold has gained further on expectations that lower oil prices will ease inflation. Spot gold at $4,330 an ounce. Copper futures a little changed. Iron ore down around 1.5% to $103 a tonne, and Bitcoin is currently trading at around $65,500. So let's get across those market moves. Peter Cardillo joining us from Spartan Capital. Peter, welcome back to you. Let's begin with what we know of that interim deal between Iran and the United States. What are you seeing there in that deal? I mean, questions have been asked of what this war actually achieved, but clearly the focus now is reopening the Strait of Hormuz.
Yeah, I think, the aim of this war certainly is not come to any fruition just yet. And unfortunately, I think the Trump administration miscalculated the Iranians along with the Israelis. And so now, obviously, the main thing is to open the Straits of Hormuz so that, it will ensure oil prices to go back down. And of course, we know that there's an overabundance of oil eventually. But for now, if you look at the tight supplies, the danger here still exists. So even assuming that the initial framework pact is signed and that the Iranians live up to their expectations, that they will immediately open the Straits of Hormuz, it's going to take time for the traffic to get to normality. It's not going to happen overnight, and so I think there's still a chance that we could see oil prices go back up. I don't think that we can go much beyond $100. And I think, until the traffic is fully uh, back to normality, we can probably average somewhere between 85 and $95 a barrel, which in a sense would be somewhat of a victory because we're not looking at oil at 140 or 150 or $200 a barrel. And I think, what we've seen since the announcement of the framework was uh, announced over the weekend, that uh, oil prices are now being uh, driven lower by the massive amount of speculators that were in the market. And tomorrow, we will be seeing, we will be getting another inventory report by the Department of Energy this
Mm.
evening by the API. And I think we're going to see once again a drawdown, which complicates the matter. But nevertheless, the good news is that oil is not likely to go back over $100.
Well, and if we're seeing oil continue to fall, obviously that eases the inflationary pressures we're seeing on economies at the moment too, Peter. That leads us into the Fed decision tomorrow, the first FOMC meeting chaired by Kevin Warsh. What are the expectations?
Well, I think they'll stay uh, they'll stay on course. I'm not expecting them to hike interest rates, nor am I expecting them to lower interest rates. Um, and I think what is going to be the most important um, part of the communique is the language. And uh, there's much speculation, or I should say, not speculation, but expectations that Kevin Warsh is not going to um, um, use the dot plot. He's going to abstain for that. And so I think the real uh, focus of tomorrow's meeting will be his press conference. And I'm sure uh, that that a question regarding on the Fed's future way of measuring inflation will be asked, and I think that from there, whatever his answer is, we can get an idea how he's going to shape up the Fed. Now, if obviously it's not going to happen tomorrow, it's not going to happen next month, might happen 2, 3 months from now. If he changes the way the Fed measures inflation from the traditional way of the PCE core rate inflation and goes to trim inflation, then I think the markets would be relieved, and that you could probably see a big rally in the bond market. I wouldn't be a bit surprised to see the 10-year go back down to 4%.
And Peter, just quickly, I'd love to get your observations about what you've seen with that the SpaceX IPO and what has happened to that stock, sucking out the liquidity, of course. Clearly, I mean, the stock price not reflecting those fundamentals. What did you make of it?
Well, I don't want to, pass judgment on the company or anything of that nature, but obviously, uh, it's it was the biggest IPO ever, and let's say that the markets caught a fever, and and a very strong fever at that, and so I think it's just feeding on itself. You know, people wanting to have a piece of the action. Look, it's just like when when you have a market that's being driven by momentum, right? You might have negative news, you might have positive news, but no matter what kind of news comes out, people just can't get enough because they're afraid of missing the train. And I think that's basically what this IPO is all about. Will it be successful? I don't know.
Yeah, well, Momo, that trade is well and truly alive at this point. Peter, great to get across what you're seeing in markets. Thanks for joining us from Spartan Capital.
Thank you for having me.
Let's turn our attention to the local market then. Just ahead of the open today, looking for a negative start. So off, SPI futures there off by around 0.33%, just losing that momentum we were talking about on Wall Street there, particularly tech coming off. Look, we've also got a number of company downgrades to get across this morning as well. We'll get to that news when we start with the open in just a couple of minutes. Stay with us.